Hello investors, welcome back to the channel. In today's video, I'm going to be showing you guys what stocks I'm going to be buying right now. So these are stocks that are either on the dip right now because the market crashed with the whole virus that's going on around the world. The Dow Jones was down about 3% today, or about 785 points. So I went ahead and added a bunch of stocks to my position. So these are already positions that I've been holding in my portfolio in my different pies, slices of pie. And basically, I'm just going to be adding more to my positions. This is a great time, especially if you're a dividend holder. And obviously, this is a dividend portfolio on my M1 Finance account. It's worth about $12,537 currently. So I went ahead and bought a bunch of different stocks. I'm going to go ahead and show you guys what stocks I bought. And then we're going to jump into my Robinhood account as well. And I'm going to show you what Robinhood stocks I bought, which are mainly, surrounding around the growth stocks. So yeah, also before we get the video, guys, thank you for 5,000 subscribers. Thank you guys for that. I'm going to be giving away that Amazon gift card in the upcoming videos, so make sure you stay tuned for that. Basically, what I'm going to do is put a code somewhere inside of one of my future videos in the upcoming weeks, and whoever finds the code first and uses it gets the Amazon gift card. Yeah, go ahead and smash that like button for me. Let's get 100 likes on this video. Leave a comment below letting me know what stocks you're going to be buying in your portfolio right now on this dip, and do you think the market's going to keep on going down, or is it time for a recovery again? All right, so we bought about 27 different stocks. I added to my position pretty much for a total value of about $4,000. So the first stock we got is Coca-Cola, ticker symbol KO. So we bought about $100 worth of Coke. Obviously Coca-Cola is a great stock to hold in our portfolio. It has about a 3% dividend. Warren Buffett, amazing. Everybody knows about him. Everybody knows about Coke. After that, we have Stor Capital, which is a REIT. So I bought about $150 worth of Stor Capital. It has a dividend of about 4.15%. Not bad if I do say so myself. But after that, we have Southern Company. I bought about $100 of this stock as well. Basically, I went ahead and looked at my positions, how much I own in each stock, and what percentage I'm up or down on each stock. And if I thought that I was down, a little bit, or if I could catch it on a better price right now, or if I see a brighter future for it in the long run, and I think that this is a good price for me to get in, that's what I did. So Southern has a 4.11 dividend. And then after that, we have Microsoft. So Microsoft, obviously, I have in both portfolios. It's not really, it has a low dividend. What is the dividend? About 1.26%. But Microsoft's more of a growth stock to me, in my opinion, but I did add more Microsoft to this portfolio. I have it in both. I added about $300 worth of Microsoft because I know hopefully by the end of the year, Microsoft's going to be back at around $200 a share. That's my goal. And then we went ahead and actually added a new one to my portfolio, and that's going to be Visa. So Visa, I never had this one in my portfolio before, but I wanted to get into Visa and MasterCard as well. I wanted to get into them for a long time, and now that we have this dip, I thought to myself, well, this might be a great opportunity for me to add this. So I went ahead and bought about $232 worth of Visa. They have a dividend of about 0.63%. But that's fine with me because Visa is one of the biggest companies out there, finance companies. After that, we have Realty Income, ticker symbol O. This is probably my favorite REIT stock that is out there right now. Realty Income, it was trading at over $80, I believe, at one point. Now that it's came down on dip, of course I'm going to buy it because I've been buying it at all-time highs. Why wouldn't I buy it now when it's cheaper? So I went ahead and bought $300 worth of Realty Income. They have a dividend of about 3.73%. I really love this one of my favorite REITs, like I said. And then after Realty Income, we have Lockheed Martin. So we bought about $100 worth of Lockheed Martin. This is a defense stock, and they have a dividend of about 2.6%. Pretty decent dividend on Lockheed Martin right there. After that, we have abbv. This is a stock that I recently added to the portfolio that I love, and I'm not really sure why I never had this one in my portfolio in the past, but I finally started adding more to my position on this one, and I just added about $200 worth of abbv. They have a nice dividend of 5.51%. I believe it was somewhere trading around $50 or $60 last year. That would have been a great time to get in, but for some reason I never looked at this stock, and recently I found out about it, and it's one of my favorite health stocks right now, actually, other than United Healthcare. But United Healthcare is very volatile recently with the elections and all that going on. But after that, we have VNQ. This is a Vanguard Real Estate ETF. So we bought about $150 worth of VNQ. The dividend doesn't show on here, but they do have a dividend, obviously. That's why I have it in my portfolio. But REITs, obviously, that's why I'm holding that one. Welltower, another REIT in the portfolio. I bought about $100 worth of Welltower, and their dividend is 4.65%. As you can see, all of my real estate companies are in 3% or higher, closer to the 4% area. After that, we have JP Morgan Chase, another one of my favorite finance stocks. So I love JP Morgan Chase. I love Visa, MasterCard, even Bank of America, even though Bank of America is probably my least favorite one on that list. But those are the four that I finally own. If you guys have been following me, in the beginning, I only had JP Morgan Chase in the portfolio. Then I slowly added Bank of America. And now I've added Visa and MasterCard as well. But I bought $250 worth of JP Morgan Chase. It currently has a dividend of about 3.1%. which is a nice dividend for a finance stock like this. As you saw, Visa is way, way lower. We have Raytheon. I bought about $50 worth of this one. It's another defense stock, just like Lockheed Martin. And they have a dividend of about 2%. This one is not one of my bigger picks, so I just bought a little bit of it, in that one. And then we have Pepsi comes after that. Obviously, I pick Coke over Pepsi all the time, so I went ahead and invested more into Coke because I like Coke more than I do Pepsi. But I went ahead and bought $50 worth of Pepsi, and they have a decent dividend of about 2.89%, almost a 3% dividend. Not bad. Obviously, everybody thinks of Pepsi as just a drink, but they have many other products in their, overall portfolio, I guess you could say. After that, we have CVX, Chevron Corporation. I bought about $50 worth of this one as well. They have a very high dividend, but the stock has been on a downtrend in the recent years. It has a dividend of about 5.53%. Good dividend. The stock is very nice for the dividend, but the price is not the best. After that, we have AT&T, ticker symbol T. This one, obviously, I loved it, but it was just getting a little bit overpriced with everything going on around AT&T. And now that we had a little bit of a dip, I said, okay, maybe it's time for me to add a little bit to the portfolio. So I went ahead and bought $100 worth of AT&T. They have a nice dividend of 5.59%, one of the highest dividends in my portfolio, I believe. After that, we have LQD. This is a investment grade corporate bond ETF, and I bought about $50 worth because I don't invest into bonds as much, even though maybe I should. I should probably get about 10 or 15% of my portfolio into bonds, but I'm not even close to that right now. And the dividend is 3.17% on this one. After that, we have Dominion Energy. So Dominion Energy, one of my utility stocks. Obviously, I bought $100 worth on this one, and their dividend is 4.47%. Another great dividend. I love these high dividend, 3 and above % stocks because they raise my dividend average on my portfolio, which means I'm going to be returning more money and compounding more, dividends into more stocks that I can buy. After that, we have MasterCard. So like I said, this is one that I added to the portfolio literally just now. So MasterCard is finally joining the team. I bought a $330 worth, which is about one share of MasterCard. Their dividend doesn't show here, but they do have a dividend. I believe it's around 3% actually. Let me take a look right here. No, it's actually 0.55%. Wow, why did I think it was 3%? It's 0.5%. We have SMH, which is a Van Eck Vectors Semiconductor ETF, and we bought $50 worth of that one. And the dividend for this is 1.55%. Very low dividend. That's why I only had $50 of this one, unlike my other ETFs that you guys see in my portfolio. Now we have one of the stocks that is becoming one of my favorite stocks overall in the stock market, and that's going to be Walmart. Walmart is doing very well in the stock market. I believe Walmart has a very bright future, obviously, ahead of it. The competition with Amazon and all the stuff that's going around, I really like Walmart a lot, and that's why I went ahead and bought $300 worth of Walmart to my position, and they have a dividend of about 2%. Not a bad dividend. The market cap is 326 billion, PE ratio of about 20. But I'm going to be continuously adding more and more to my Walmart position. After that, we have sphd, another ETF. I bought $200 worth. This is a S&P 500 high dividend, low volatility ETF, and I bought $200 worth of it, and their dividend is 4.6%. I like this one. I've actually been adding to this stock over and over and over in the past week. I think I've added like $100 one day, then like 200, 500, another 200, and then now, 200 again. So I just keep adding to that one because it has a nice dividend, and it's obviously the S&P 500 high dividend, low volatility ETF. After that, we have Pfizer, which is actually one of my worst stocks performance, in the portfolio. I bought $50 worth because I'm just trying to average down my price because my price is so high and I'm down on the stock. So I'm just going to keep buying as it goes down. I'm going to keep buying more because it has a 4.55 dividend. I really like that dividend. It's a nice dividend in my opinion. After that, we have Duke Energy, another utility stock. I bought $100 worth. Duke has been doing well for me in the past year. The dividend is 4.12%. After that, we have, what do we have? We have Comcast. Comcast, obviously Comcast, Verizon, we all love those. 5G, everything, competition coming up. Same with AT&T. I bought $100 worth of a Comcast, and their dividend is about 2.28%. Nice dividend for a company like that. After that, we have our last finance stock. It's going to be Bank of America. So we bought about $200 worth of Bank of America. This is a stock that I've been wanting to build up on my portfolio, but I've been slowly adding to it. So I said, let me just go ahead and add $200 worth. The dividend is 2.53%. Good dividend for our finance stock. Way better than Visa and MasterCard, I can tell you that. But yeah, Bank of America and JP Morgan Chase are keeping up with each other. After that, we have Johnson & Johnson, another great health stock in my portfolio. I bought about $200 worth of this one, and the dividend for Johnson & Johnson is 2.83%. And then last but not least, in our M1 Finance portfolio is going to be ticker symbol VZ, which is Verizon. We bought $100 worth of Verizon, and their dividend is 4.54%. That's another reason why I added $100 worth. I'm just going to keep on adding because Verizon is a very high dividend, and I believe it has a lot of potential in the long run. Now we're going to go ahead and hop on over to my Robinhood portfolio. Don't forget, make sure you like that, Don't forget, guys, make sure you smash that like button for me, subscribe to the channel, leave a comment below what stocks you're buying in your portfolio and how everything is performing in the market right now, and what are your thoughts on the virus that's going on. And yeah, let's get into the Robinhood portfolio. Okay, guys, wow, look at that red. We're down $453 today on our Robinhood portfolio, but our Robinhood portfolio is worth about $11,655 currently. Yeah, so first off, I have a bunch of options. I'm not even going to show that in the portfolio right now because that's not something I'm holding for long term. So we're going to go ahead and start off with Microsoft. So the first stock I have is going to be Microsoft in the portfolio. I added one share of Microsoft to the portfolio because Microsoft's been, it was trading at over $180, close to $190 actually. So right now, this is a great buying opportunity, and I went ahead and bought one share of Microsoft to add to the portfolio. Next up, what I did is I added 2 shares of Apple today. Our average cost is $303. We're already down on this position because today was a horrible day. Dow Jones was down about 3%, but we went ahead and added Apple to the portfolio. I mean, I had Apple before, but I sold out of it. But I thought that it would be a good time to buy some Apple right now since it's as a decent price. And, once it breaks through at 300, then we'll be okay. Good buying opportunity. Could have even got it for a little bit cheaper, but this is a good price for me right now. After that, we have NVIDIA. So NVIDIA, another great stock. They make chips, computer chips. So they were at a high of about $314 right there. Currently at $266. I got in at $278 actually, a little bit overpriced again. Obviously, every time I buy a stock, I always buy it at all-time high somehow or at a high of the day or something, just like it did here. But I bought 2 shares at $278 average cost. We're already down on that position for the day, but that's another one I added. Now, we did add 2 shares, as you can see right there, market buy on March 3rd. I bought 2 shares of McDonald's. McDonald's, I had 10 shares. Now we have 12 shares of McDonald's. And obviously, the stock is under our buy price or average buy price. So that's why I added more to the portfolio, because McDonald's is a great stock to have for the long run, and it has a pretty decent dividend of about 2.5%. So now I have 12 shares of McDonald's. We went ahead and bought some Home Depot. So Home Depot, we bought at an average price of about $230 a share. We bought 2 shares of Home Depot. It had a high of about $247 right there, so we still have $20 until we get to that price. But obviously, on the dip, Home Depot, decent stock, has about a 2.75% dividend. They just had earnings recently, and I believe they destroyed the earnings. They did really good. Let's check right here, actually. Yeah, they beat earnings by a lot, by actually 0.17 cents, so that's good. Next up, we have Beyond Meat. So I actually bought Beyond Meat right before the before earnings, and earnings were not that good. Our average buy price is $117, and currently it's trading at $95. We bought 4 shares, so we're down $86 on this position. But in my opinion, I believe that Beyond Meat has a very bright future that might take a couple of years for it to, really build up and grow. But once it starts going, it's not going to stop, in my opinion. And I think that this stock is going to be worth a lot more 5 years from now than it does right now. After this, we have Delta Airlines. So this is one that I definitely wanted to add to the portfolio. Airlines right now are down, like I mentioned in my previous videos. So I went ahead and bought 14 shares of Delta Airline at an average cost of $46.14. We're actually up on this position. It was up even more, but today we had a horrible day. It was, close to $50 earlier, actually. We also have some contract options that I just want to mention to you guys. I have 3 contracts. It's the March 20th 55 call, so we'll see what happens with that. We need it to get to about $55 so we can make some profits. I'll keep you guys up to date with that. But that is the last stock that I added to the portfolio. So what do you guys think? Do you guys think it was a smart idea for me to go ahead and buy all these stocks and add to my portfolio? I think I invested close to $5,000 or $6,000 on this dip, maybe even more. I've been doing okay. I've been trading some VXX contract calls during the market, crash. I made some decent profits on 2 or 3 days last week during the crash. But I've been just using all those profits to reinvest again and try to place some more contracts. Some of them have worked out for me, some haven't. And I'm just buying more shares and buying on the dip because I'm a long-term holder. And I know that in 5 years from now, most of these stocks are going to be way, way higher than they are right now. And they're going to be paying me out in dividends, which is something we all love. So yeah, guys, make sure you smash that like button, subscribe to the channel, and I'll see you guys next time.